Well, the record date for this buyback is June 2nd, which means that the last day to buy shares is today. And now why this buyback is important? Because the company is buying back shares at a price of nearly 650 rupees, which is at a premium of 72% compared to yesterday's closing. Now, the company intends to buy back nearly 1.15 crore shares, of which 15% of this will be reserved for retail shareholders, that is close to 17.31 lakh shares. So how can a retail shareholders earn out of this buyback? Firstly, to be eligible as a retail shareholders, they need to buy shares worth less than 2 lakh rupees. That means that at current market price of 378 rupees, 529 shares is what a retail shareholder can own. Now they need to tender all these shares for buyback. Now if they do this, then the gains on the buyback would completely depend on the acceptance ratio, which means how many shares are actually accepted for buyback by the company, which will be declared at a later date. But we have made this table where you can see if the acceptance ratio comes at around 100%, then the gains would be nearly 72% on this buyback for a retail shareholders. And if the acceptance ratio is 50%, then the gains would come down to 36%. At 25% acceptance ratio, the gains would be close to 18%, and at a least acceptance ratio of 10%, the profit or the gains would be close to 7%. And do remember that these gains would be tax free, because buyback is tax free in the hands of shareholders, and the entire process of this buyback could take close to 2 to 3% of 2 to 3 months of time. So at around 25% acceptance ratio, 18% is of the gains that a retail shareholder can make over the next 2 to 3 months, which will be tax free in their hands.